The Bank of Ghana has increased the amount of dollars it supplies onto the market. Joy Business has gathered that the regulator on Thursday, August 27, supplied about $30 million compared to the between 10 and 20 million it had been injecting. Economist Dr. Godfrey Bokping is cautioning the Bank of Ghana against the frequent supply of dollars onto the market, especially around this time of the year. Why? I will be telling you. Plus, is the Bank of Ghana's decision to suspend the 5-year bond sale the best decision for the economy? We find out too. I will also be telling you how your stocks fared last week and which stocks you should look out for this week. My name is Eton Amsi and this is Business Live. This is your most authoritative business program. Here, we take a look at pertinent issues affecting businesses and the economy as a whole. First, our news roundup for today. The IMF board is expected to begin meeting Monday to find out how Ghana has fared under the 3-year bailout program. The review, the second since the deal was struck, is seen as crucial because if Ghana secures the board's approval, it will pave the way for the release of some $114 million from the fund to support the country's import bill. The funds will also help prop up Ghana's reserves to help stabilize the depreciating cedi. Some professionals working with private companies at the ports are pleading with President Mahama to absorb them into the public sector as the cancellation of contracts leaves more than 500 people jobless. Our experience and expertise are so valuable and it's expensive, spokesperson for the group Kalsoa said to Joy FM's Super Morning Show. He will no longer be working with Web 14, one of the private companies contracted by government to inspect imports and check revenue leakages. Together with hundreds others, they will be axed after Monday, August 31. The Agricultural Development Bank, ADB, has recommenced its initial public offer, IPO. The IPO kick-started today, August 31, 2015, after it was put on hold following 2 suits filed by the Union of Commerce, Industry and Finance, UNICOF, in an Accra High Court and the Supreme Court. UNICOF on Wednesday, 19th August 2015, withdrew the case it filed against the bank at the Supreme Court over its initial public offer. A human rights court has dismissed for the second time the suit against the planned implementation of the National Single Window Scheme at the ports. Another court had earlier in July dismissed the case, but the plaintiff filed a repeat application seeking an injunction on the scheme, citing the breach in the procurement laws with the contract awarded to IT company West Blue. According to the judge, documents available to him suggest the contract has already been awarded and signed. Government has postponed the issuance of the 5-year Treasury bond. The Minister of Finance, Seth Tekpe, early this month announced government will issue 5-year Treasury bonds to raise $500 million towards infrastructural development in August. The Government of Ghana bonds, which will be governed by Ghanaian law and listed on the Ghana Stock Exchange, will be available for investment through the Bank of Ghana appointed primary dealers. But a statement from the Ministry of Finance says the ministry, together with the Bank of Ghana, has postponed the issuance of the bond due to market developments. The Bank of Ghana has started increasing the amount of dollars it supplies onto the market. Joy Business has gathered that the regulator on Thursday, August 27, supplied about $30 million onto the market. This represents 20 million Ghana cedis more than the about $10 million that it was supplying the market over the past few days. EcoBank has emerged as the 2014 Bank of the Year at the Ghana Banking Awards held last Saturday night in Accra. EcoBank beat competition from 27 other local and international banks to pick the topmost award at a ceremony held at the Labadi Beach Hotel. Welcome back. And Joy Business has gathered that Bank of Ghana on August 27 supplied about $30 million compared to the between 10 and $20 million aid had been injecting. Now, economist Dr. Godfrey Bokpeng is cautioning the Bank of Ghana against the frequent supply of dollars onto the market, especially around this time of the year. And thankfully, he joins me here in the studio to have some further insight on his suggestions. You're welcome, Sam.
Thank you.
Now, last week, some businesses or business organizations were calling for more injection of dollars into the system to shore up the CD. And I mean, businesses should be excited about this, but you think otherwise?
Yes, I think that there's a place for that in monetary policy conduct, but you want to be measured in the amount of intervention and the timing as well, because you want to balance that against the desire to build your international reserves around a time when demand pressures are low. So ideally, you want to be able to time the intervention such that you will do more of that at peak periods when demand pressures actually pick up, especially in the run-up to the Christmas and then the first quarter of the year. That is where we are exposed. But my understanding also is that with the IMF review, which I believe that will be positive and which will also trigger donor inflows, the syndicated cocoa loan, the Eurobond, the outlook should be much brighter, and I expect the market to respond positively with the arrival of those news. In that case, the level of intervention and the timing would then be the change in the factor.
Okay, and how about the second tranche of the IMF?
Yes, ideally, how much are we getting? So if you are doing daily 30 million, then you can only do that for less than 2 weeks, and all that you'll be getting from the IMF will be over. Then you are exposed. So it's very, very important that you look at the timing and the volume of intervention in the system. But certainly, there's no way we can do without defending the currency in terms of the intervention that the central bank is making. But I think that we have to be measured in the level and the timing of the intervention so that we don't deplete our reserves during when demand pressures are low. And then you become exposed in the run-up to the Christmas and in the first quarter of 2016. I believe that this is the timing issue that we have to take seriously.
Now mentioning Christmas, I mean, short term, what do we do? Because people will need to import and get it to the wholesalers and get it ready for people to retail. Now, this is the time they should be importing. If the CD that continues to depreciate, it will come at a loss to businesses. Yes. Yes. So short term, what do you suggest?
Yes, there isn't much that we can do in the short term. And I've said this before, that it doesn't look like we are being fair to the central bank, that it's only the central bank that could solve the CD's problem. I mean, we should be looking at more in terms of medium to long-term a solution to the CD, where we look at the fundamentals of the economy, because the CD is actually providing a feedback to weaknesses in the fundamentals of the economy. And then you don't solve that alone by just defending the currency, because you don't have enough to defend the currency, because if you don't take care, you soon deplete your international reserves, and then you are exposed, because that also presents some risk to the economy. So a certain level of intervention is needful, but you have to be measured, because the way we did it the last time, we actually ended up putting money in the pocket of other people who bought dollar at a time when the price was particularly low and could now reverse the transaction at higher price now, because speculators is also a function of time, and you want to be able to monitor the developments as against how much you actually have and how far you can keep defending the currency. A certain level of adjustment is to be expected, really.
No, so what do we do? What are your suggestions in the meantime? Because I mean, we need to help the CD appreciate or gain some value. Yes. So what do we do in the meantime?
In the meantime, some level of intervention is needful, but we have to be careful about the amount and then the timing also. I believe that what we have to do is to try and maybe do more of the interventions as Christmas approaches, maybe towards the end of October, November, and again build some reserves against the first quarter of next year, because we have been there before. The supply side are highly predictable in terms of syndicated cocoa loan, the Eurobond, and then all of that. But going into next year, in the election year, we expect that really you can do another Eurobond, and then you are exposed. So it's a dicey issue, and there's a trade-off there also in terms of how much intervention you can make as against your desire to build your international reserves also. So really.
All right. So let me take your input here. How did we get here? I mean, the way the cedi is, the level and the rate at which it's depreciating. Did you foresee this as an economist?
Yeah, I mean, it's obvious. You can trace it to the fundamentals of the economy. We are talking about the real sector, agric, industry, service. I mean, the last time the president was talking about the fact that we spent $1.5 billion just to import tomato paste and other fruits. So essentially, if you do so well in exporting cocoa, you get close to 1.8 billion. And then you take 1.5 billion out of that to just go and pay for tomato paste and other fruits. And then we are spending over $500 million to import meat and then rice and the rest of them. So we realize that if we had done well in terms of agric, and that is where one would expect that an integrated and a coordinated approach would have been developed in actually providing a solution to the cedi. It doesn't have to come from the central bank alone. I expect the Ministry of Trade and Industry, Ministry of Food and Agri, and then the Ministry of Finance in terms of the necessary fiscal discipline that is needed to give credibility to monetary policy conduct. Once we are able to do this consistently, we expect that, yes, even though the cedi would depreciate by a certain margin, it wouldn't have to be the level that we are seeing, because the cedi just doesn't misbehave on its own. I mean, it's actually providing the feedback on what is actually backing the cedi in terms of the fundamentals of the economy, the real sector, I mean, monetary sector, public finance, and then the external sector.
I see. I will be coming to the bonds shortly. We are trying to reach a currency analyst to find out what really is the reason why we are seeing the marginal appreciation of the cedi. And when we get him, we'll put him through, and then he will share his perspective on the matter. But let me drift away from that. The decision of government to suspend the 5-year bond. What do you make of it? Do you think it's a good decision?
I'm not too sure they have a choice. I mean, you wanted to raise 500 million 5-year bond. I mean, the market is also looking for a certain rate, and as against how much government wants to offer. So the market is saying that for trading of consumption for a period of 5 years, perhaps I deserve this. Government could offer this. So once that agreement couldn't be, let's say, secured, then certainly government would want to maybe say we are postponing it and watching market development. But government also has the incentive to do that because they are also looking at the Eurobond. So if we are successful with the Eurobond, that would also provide some inflows for government. So really, they are not really under so much pressure to pay, I mean, over a certain level. Because government is looking at borrowing, but they're also looking at keeping their interest costs low. But you can't have both.
Right.
There's some trade-off there that we have to make.
And you think, I mean, what does it say about us? What exactly does it say?
I think that the market is pricing some risk in the economy, and for which reason they would want higher yields. That is my understanding, as against how much government is willing to offer. But government is also looking at it that, yes, that is not the only option. We are also thinking of the Eurobond. Okay, so if that goes well, we also expect that they will receive some inflow, because part of that is also meant to restructure the domestic debt. Right. So it's not like they are totally exposed and there's nothing that they can do. Right. But obviously, if you want capital for a period of 5 years, you should be prepared to pay the price. Otherwise, people will not trade off consumption and invest in your security.
All right, we'll come back to that. Thankfully, currency analyst Derek Mensah joins us on the phone lines to tell us what this injection should mean to businesses. Hello, Derek Mensah.
Hi.
Now, from the perspective of a currency analyst, what is accounting for the Ghana cedi's appreciation?
Well, it's the periodic defending of the currency that the central bank has adopted, the measure that it has adopted. So it's the increase in supply of FX in the market that is causing the currency to behave the way it is.
Now, we are told that on Thursday, government started injecting more. Did you see that?
Yes. What we deliberations with some of the banks indicate that there has been an increase in supply from the central bank.
Right.
And this improved the supply of dollars on the market generally.
All right. Now, it might be early days yet, but any reaction from offshore investors?
My deliberation with offshore guys, and I'm talking guys in the equity space and long-term, the direct investment space, I'm not very happy the way our currency is behaving. They would have, from my deliberations, they would have preferred to even see a gradual decline in the currency rather than to see it appreciate the way it is. The level of oscillation, the level of volatility is just too much for investors. So it's actually a deterrent for a lot of foreign investors at this time, and it's just fueling speculative activity.
Now, from where you sit, can we sustain this trend?
Well, as I said earlier, or as I've been saying, this measure is just a short-term measure. It's not sustainable because we have a finite number of dollars that we have in the system. We can't continue defending the currency the way we are doing. But this measure has been used and is being used by a lot of countries, of course. But they are short-term measures trying to stabilize the currency. It goes hand in hand with addressing the medium to long-term measures. So if the central bank comes in and sells dollars just to stabilize the currency and doesn't go back and address the medium and long-term challenges, then all we are going to see is a continuous depreciation of the currency.
Right. Many thanks, Derek Mensah. Derek Mensah is a currency analyst. Many thanks for your time. Well, the Bank of Ghana says it is expecting the Ghana cedi to stabilize by next month. The central bank's expectations is based on some $4 billion expecting from the Eurobond, cocoa, loan syndication, and donor inflows. Anyways, we wish the Bank of Ghana all the best, and we hope that this works. But briefly, what do you make of that? Do you think that the cedi will stabilize next month?
A certain level of stability is expected with those inflows, but the point is that how long will it last? Okay, because it's highly predictable. You are looking at 4 billion, but if you look at the dollar deficits over a 3-month period, then you realize that beyond that you are exposed, and that is why yes, it's a short-term measure. I mean, and perhaps it doesn't look like there's more that they can do apart from just defending the currency now, because the solution actually lies with governments in terms of the coordinated approach that we put. Because if we are importing okra, we are importing basic things, then we expect that the Ministry of Agriculture should be providing a solution. How do we reduce this in the next 2-3 years? Come out with a clear strategy. Ministry of Trade and Industry, how do we do this? Because there are certain items that we import that really we have comparative advantage. If we are able to back our comparative advantage with the necessary competitive advantage by creating the enabling environment, then we expect that we could be making some savings in terms of how much we would have even spent on importing those items, whilst our export diversification is also bringing some inflows. With that one, the cedi will be able to breathe well to some extent. But the way we are going, the central bank cannot consistently keep defending the currency.
Dr. Godfrey Bokme, many thanks for your time this evening on Business Live. Well, Bertha is joining me shortly to tell us how your stocks are faring. Please stay. Welcome back. Well, unfortunately, I'm unable to get through to Bertha to join us for our stocks analysis today. But don't worry, for more news, you can log on to myjoyonline.com. Thanks for staying with me. My name is Etonam.